For the first time in almost 12 months, we have seen an increase in sale prices, and that's for all asset classes throughout the Fraser Valley. So the question on everyone's mind is, have we hit the bottom, or was this just a one-off for the last month, and should we expect prices to continue to decline for the foreseeable future? My name is Caileigh. I sell real estate in the Langley and Fraser Valley area, and I'd greatly appreciate if you guys could hit that like and subscribe button if you are finding this content to be of value. Reminder that there's a link below if you want to book a 30-minute discovery call to talk more about your real estate needs. You can do so below by clicking the link. So when we're looking at the Fraser Valley board and we're comparing all property types here, and we're wanting to look at the HPI price or the benchmark price, which again is just the most accurate indicator for a sale price. It's better than the average or median price in my opinion. We can see that month over month we did see an increase in sale prices, and that's again happened for the first time in almost 12 months. So the peak of the market was back in March for the Fraser Valley, and it's been on a constant decline since then, with the exception of last month, February 2023. Now, breaking this down by unit type, we can see that across the Fraser Valley, in terms of the benchmark price, detached homes and townhomes and condos were all in the peak last quarter of 2022, and they've all kind of followed a similar suit. Obviously, the detached market being on the more volatile side, feeling the price drop at the highest intensity, followed by townhomes and finally condos at the bottom. We can see that the bottom technically right now is showing as of January 2023. However, when I switch it over to the average sales, we can see here the detached price points bottomed in November 2022, then have consistently seen a rebound. When we switch over and turn our attention to the number of sales, we can see that overall in February 2023, there were 898 total sales. And again, that's for all asset classes. So we are down 50.8% from this time last year. But remember that last year at this time, that's when we were hitting the peak of the market. So when we compare that month over month, we can see that we're actually up 43.5% in the number of sales. And when we look at new listings, because that's something that's been an issue over the past few months, we've just had very low levels of inventory. We can see that inventory is down 48.2% from this time last year in terms of new listings. But when we look at this time last month, we're actually up almost 6%, which is great to see, because one of the problems with low inventory is that it begets low inventory, because when there's nothing for people to choose, they don't want to sell and list their home when they don't have anything to choose from. Another indicator is consumer uncertainty. So because there is still some consumer uncertainty in the air, there's no question about that. You know, a lot of people tend to want to sit on the sidelines and kind of wait to see what happens, unless they are getting relocated or had health or financial issues and they don't have to sell. Most people won't, and they'll just kind of wait by to see what happens. What I also wanted to show you was that of the 898 sales, we can see that 278 were detached, 241 were townhomes, and 286 sales were condos. So it's kind of interesting to see that condos, we saw the highest number of sales. And again, that's due to affordability. So we can see that sale prices are up and sales are up in comparison to January 2023. Looking at the time it's taking for a home to sell on the market right now in the Valley, we can see that the highest days on market occurred in January 2023, and it's fallen quite a bit last month. So it's going to take you about 2 weeks to sell your property in the Fraser Valley. And what I also want to focus on is the absorption rate. So that indicates how fast a home is taking to sell on the market. So if you've been watching my channel, you guys know I like to talk about months of inventory, and that is simply how long it takes for a home to sell. The Fraser Valley board uses sales to active ratio. Anything between 12 to 20% indicates a balanced market, and anything that's above 20% indicates a seller's market. Anything under the 12% mark is a buyer's market. When we're looking at the Fraser Valley for all property types here, and we're comparing it to sales to active ratio, we can see that it's actually on the increase. So ever since the peak back in March 2022, been on a constant decline, remained quite steady in here during the rate increases. And just as of last month, we have seen an increase. So we moved from technically a balanced market now into an official seller's market for all asset classes. If I compare detached homes with that, we can see detached detached are sitting at 17%. It's a balanced market. When I compare it to apartments, we can see that we're sitting at 26.4% sales to active ratio, which again is in the seller's market category. And the one that kind of surprised me was townhomes. So they're sitting at the highest. They're at 35.1% sales to active ratio. That tells us that people are still wanting to get into a home, perhaps upsize from their condo, but maybe just that detached is not affordable right now for their lifestyle because of the interest rates that we have seen over the past year. That has been a massive challenge for families to, be able to get into that home, even though yes, prices are lower than what they were. Affordability wise, month to month, when you finance your mortgage out at today's rates, it is a challenge for many families. The Bank of Canada met on March 8th, 2023, and that was the second time that they have met this year. They decided to hold the overnight lending rate. Now, this is the first time the Bank of Canada has held the overnight lending rate in almost 1 year. So they started increasing the overnight lending rates in March of 2022, and you can see that every time they had a meeting, they increased the rate. In January, they did increase it by 25 basis points, which was sort of what we thought was coming. However, we were quite unsure about this past meeting, and the fact that the bank has held the rate is a positive thing. I know a lot of people, especially those that were sitting with variable rates, were, definitely feeling the heat. I personally have clients that are in a variable interest rate, and they're extremely stressed out. We haven't really felt the full effects of the rate increases that they've implemented over the past year, because if you are in a fixed rate and you're in a locked term, these past rate increases haven't even affected you at all. When you go to refinance in the next year or month or whatever it is, that new rate that you're getting today could potentially be a shock to you. I want to know what you guys think. Do you think that we have hit the bottom, or do you think that February was a one-off month with the uptick in the number of sales and sale prices, and that we should continue to expect decreased sale prices throughout the remainder of the year? There are two main factors that have attributed to February seeing an uptick in prices. One, of course, is the Bank of Canada holding the interest rates, and the second is the low inventory amount that we do have throughout the valley at this particular time. I am hopeful that with the spring market coming up, we will start to see more active listings and new listings come to the market. It's something that we desperately need, but that mixed in with the fact that the rates did hold should provide some more consumer confidence in terms of what to expect going forward with rate increases. I think that we might see another 0.25 increase. And the only reason I say that is because the US is expecting to continue to increase their interest rates. And without getting too into the economics of everything, if the states do continue to increase their interest rates and we do not, it's going to have a negative effect on the value of our dollar. So that's really the only reason I think that we might continue to see a rate increase. It's going to be nothing to the extent that we were used to over 2022. Thanks again for watching. If you guys are enjoying my content, please hit the like and subscribe button. That greatly helps me out. I very much appreciate it. And if you want to book a call with me to talk about real estate, whether that's buying, selling, or just general questions about the market, you can do so below by clicking the Calendly link. Thanks again for watching. I will talk to you soon.